If I had to start trading from zero in 2025, this is what I would do. And I'm gonna give you a list of the things that I would do if I was just starting off. And some of these things on the list, I actually still do it, and I'm going to continue using them or doing them simply because they actually work. Grab a piece of paper, a notebook, a pen, and let's go ahead and start. I'm just gonna give you a warning right now, and the warning is that what I'm about to tell you right now is basically based on my experience. That doesn't necessarily mean that it's gonna work for you 100% guaranteed, and more importantly, it doesn't mean that you're just like immediately gonna start making money after watching this video. It has nothing to do with it. One thing that I've noticed in regards to day trading is that 90% of it is psychologically. If you don't have the right psychology, you won't be able to actually make money in any business whatsoever. So what I'm gonna tell you is exactly just what I would do, some of the things that I do or I do, and yeah. Let's go ahead and begin. Before I start with the first one, just gonna give you a warm invitation. Remember that you can join my free Telegram channel below in the description of this video, where I share daily content, I share trusted companies, trusted articles, and so on. And more importantly, where I sometimes share some free trades as well. So that being said, let's go ahead and do that. First thing that I would do if I was just starting off from zero right now in 2025 is I would avoid learning indicators. I know this is gonna sound so weird for some people and they're gonna be freaked out, but that's the first thing that I would do. Avoid learning indicators. Some of the things that I actually wasted more time of when I started trading back in 2014 was to actually learn every single indicator. So I learned what was a moving average. I learned what was an CCI. I learned Bollinger Bands. I learned what's this RSI. I learned, and I started learning so many indicators out there that, yeah, the knowledge is always good, but none of that or none of those indicators actually help me at all nowadays. None of them. And the reason why is it that I would avoid learning them is not because it's actually gonna like affect you or you're gonna lose money because you know about indicators, but because you could be wasting time that you could focus on learning what's really, really important. In this specific, like as of today, I only use support and resistance and trend lines. That's it. None of them is indicators. You need to actually learn how to do it yourself. Let me give you an example. This is today's trade. I actually sent this trade on NASDAQ this morning and I actually realized this. You might be saying, hey, but you have a stochastic oscillator right here. It's simply because I'm actually used to it, but I don't really use it anymore. But this is what I saw in this specific trade. Like by learning what is really important to me is support and resistance. So you can see a resistance level right here was a previous support that was broken and it became a resistance. And then I see the bottom part right here, which it could be considered a support level on a 5-minute candlestick. If I actually go in a higher time frame, I don't see any of this because we are in an all-time high on NASDAQ. I saw support and resistance. The way I trade is based on breakouts. So if it breaks going up right here, I'm gonna enter a buy position. If it breaks going down, I'm gonna enter a sell position. This was a downtrend. As a matter of fact, you can see the trend going on right here. It could be considered a downtrend. So I'm like, okay, I'm just gonna enter a position once we actually hit the breakout. Once it happened, literally right here, as you can see, market open, candlesticks kept on coming, and boom, it opened. It went all the way to my target, which was a 5-to-1 on risk reward ratio. Did I need to use an indicator and CCI and MACD or a bunch of indicators? No, I didn't use any indicator. All I used was support and resistance. If I was starting in 2025 right now from zero, I would avoid learning about indicators. They just don't work. It works support and resistance levels. Number two, if I had to start trading from zero right now, I would use only one asset and one schedule. What I mean with this is one asset, for instance, myself, I'm trading US 30 or I'm trading NASDAQ. That's the only two assets that I currently trade. I used to see also gold. I used to see Euro USD. I used to see GBP USD, GBP JPY, and so on. What happens when you actually see too many assets at once? You're not familiar with the movement of that specific asset. That's the thing. When you are familiar with an actual asset, for instance, NASDAQ right now, you understand different things. For instance, you can understand there's a trend line going on here, and there's another trend line going on here that actually turned into this right here. As you can see, now you got two trend lines going on, one being respected right there. You see that? I can see that because I am familiar with my asset. Now, if I actually go into Euro USD, that doesn't mean that I'm not going to understand it. I can understand it. But let's be honest, like, how many times during the week have I actually seen this pair? Probably this is the first time. If I'm not mistaken, this is the first time. Gold, maybe once in the last couple of weeks. But US 30, I have this trade right here. NASDAQ, I have this trade right here. As a matter of fact, this trade that you see right here, it was a loss. I lost it today. But yesterday we had a huge win. We had another win the day before, and so on. What's the problem with focusing on too many pairs? Is that you don't actually are going to be familiar with all of them. But if you focus on just one, not only it's easier because it's going to be way easier, but you're going to get way more familiar with that pair as well. And what I mean with one schedule is, look, I don't know, for some reason, people would think that you need to spend hours and hours and hours in your computer in order to make money with day trading, but that's not the case. Most of the times, you're going to need no more than 1 hour a day. Okay, this is one of the most boring careers in the world. And yeah, you heard it right. This is one of the most boring careers in the world. As a matter of fact, since I started posting less content on YouTube, I had less things to do during my day. And last month, there were so many days when I stopped trading. I started trading at 7:15 in the morning. I finished at 8 a.m. in the morning. So from 8 a.m. in the morning, I used to work out till like 10 a.m. in the morning. From 10 a.m. and onwards, I had nothing to do. They were boring days, okay? So yes, this is the way the business works. Why? Because just because you trade more time, that doesn't mean that you're gonna make more money. It's actually the opposite. And in my specific case, I chose 7:30 in the morning because that's the time that the New York market actually opens. And that's the time that I got the best movements on US 30 and NASDAQ. If you're in a different time zone than myself, you have to choose your own schedule. Let's say from 9 a.m. to like 12 p.m. Look, I mean, I take less time because of the market opens, but if you're gonna trade with moments with less volatility, then you're probably gonna need to spend more time, but you get the point. Choose within 3 hours. 3 hours and that's it. Maybe 4, depending on how you're trading. But have the same schedule every single day. That way you're gonna be familiar with the asset and you're gonna be familiar with the actual schedule as well. Number 3, if I had to start day trading from zero, I'd spend less time in my demo account. And here I'm gonna get some mixed opinions in the comments, and that's completely normal. But in my opinion, trading in demo only helps you to understand the trading platform that you're using. It doesn't help you like practicing your strategy, your emotions, or your self-control. If by any, or your risk management. If you trade on demo, let's say for 6 months, you're gonna have some amazing results because you're not trading like the way it is. And when you switch into the real account, you're gonna start losing money. And I get this a lot. Like every single day, people are like, hey, I'm making money on demo. And then when I actually switch to my real account, then I end up like losing all of my money and so on. Yeah, it's completely normal. And the reason why is because, and I mean, this is obvious, but I need to say it, is demo is not a real account. It's like playing virtual, what's it called? Virtual reality glasses where you actually do jogging or whatever and then go and jog outside. It's completely different. What is it that I would do if I were to start right now in 2025 is I would actually put an actual amount of money that I know that if I lose it, I'm going to be okay and trade with real money. So if it's $100, start with $100. If it's $400, start with $400. Don't start with $1,000, $2,000 if you can afford to lose $2,000. Okay. Why? Because with 100, let's say with $100, you can risk $10 per trade, 10%. Because I'm not sure how such a small account is going to allow you to trade less than that. But let's say $10 and you're targeting a 2-to-1. So you're trying to make $20 per trade. And when you lose a trade, you lose $10. It's not the same losing $10 than losing $1 million on demo. The $10 are going to get to you emotionally, while the $1 million on demo, they don't like really care. Like, you're not going to care. So if I were you, I would start with less money, because you're now in the trading on the real training field. So you're now feeling the real emotions, probably not with the same amount of money, but you are being emotional. So there you can start training your emotions. With demo, you're never going to do that. So that's what I would do. I'm not saying you're supposed to do it. It's just what I would do. Number 4, if I had to start trading from zero, I would follow one mentor only. Could be me, could be anybody else. It's really up to you. But following more than one mentor, it actually makes things so confusing. I was actually looking at some video ideas like last month, if I'm not mistaken, and I saw videos saying that the best indicator to make money was the SMA 200, the moving average, because it continues with the trend. Same person said that the best time frame was 15 minutes. I saw another video saying that, yeah, the 200 indicator, but with 1-hour candlesticks, not with 15. Another person said that it wasn't the 200 SMA. It was an actual EMA. Another person said that the moving averages don't works only the actual Bollinger Bands. And then you get to see me saying that I don't care about that. All I care about is support and resistance. Do you see the problem right there? Everybody has his own opinion. And when you follow more than one mentor, you're gonna make not mistakes because the mentor is wrong, but because you're not following exactly the same path that person is following. So look, if I want to be like someone because that's my mentor, I want to be where he is or she is, I'm gonna do exactly what she or he is doing. So if I follow 3 different people, I'm not gonna make a combination of the 3 of them and be just like them combined. I'm gonna be confused. I'm not gonna know who to follow. I'm not gonna know who to blame. So follow just one mentor. Like I said, it doesn't have to be me. It can be anybody, but just follow one mentor for your own safety and peace of mind. Number 5 thing, and the last one that I'll do if I had to start trading from zero, stay away, but very away from any Instagram guru. Gurus are not on Instagram. Let me say that one more time. Gurus, mentors, teachers, real traders are not on Instagram. Or at least let me try to break it down. If you see someone posting some motivational content every day and showing their Ferraris, the Lamborghinis, their Rolex, that's fine. They might have the money, but they're not traders. Follow someone on YouTube, someone that actually trades live. Why is that? I actually follow one person over here on my channel. I don't even know his name because I'm not, I don't spend that much money, that much time, on YouTube, watching his videos, but I know him. He's 20 years old and he actually connects every single day or at least once or twice a week. And he actually trades live for 2 hours. And he shares what profits he's making when he loses money and so on. That's a guru. If you go on Instagram and you only see pictures of someone with a cigar, a bunch of cash and so on, stay away from it. He's selling you a course. That's another thing. If someone's selling you a course, that's not a good mentor. A good mentor is just gonna share 100% free his knowledge, and maybe he's actually gonna give you some sort of membership so that you can trade live with him, but not directly a course. I'm not saying buy my signals. Don't buy them. I don't care. What I'm saying is I would avoid, if I were you, Instagram gurus. They're just sharing their good stuff. They're not sharing the bad stuff. And that's something that I would avoid. There might be some really good Instagram accounts out there that actually share content and maybe they show off Lamborghinis and so on. For instance, Mamba FX is someone who's actually sharing the cars, but I actually have seen him trade live and he's actually a day trader. That's the thing. There's a difference between a day trader and a salesperson, and the majority of them are salespeople. So If I were you, I would just avoid Instagram gurus, bottom line. Hey, so hopefully, these tips actually help you out for your trading career. And if you did enjoy the video, go ahead and smash the like button. Wish you the best on your trading journey, and I'll see you in the next one. Peace.